Everyone. Yes, uranium flavor of the decade. It's I think it's the future power source, and the rest of the world's starting to catch on. So thanks for that. Global sentiment is certainly changing, and it's evolving very quickly. It's obviously coming from the fear of a climate catastrophe, which obviously isn't based in science, but what's happening is it's affecting policy. Global policy is now looking for a solution to not only climate change, but pollution, particulate pollution. If you've been to Beijing, you would know. And so nuclear energy has risen to the top as a way of having real clean energy. And it is absolutely the cleanest energy. And you can see that happening in the US and the EU. Demand growth is increasing. It's slow, but it's increasing. But really what's happened is that the supply lag has been talked in. I'll talk a little bit about that. And for us, We've got fantastic deposits with a team who have delivered mines before, and we are going to start some work on MULGA rock this year. It is an ESG investment. Big sovereign wealth funds and other funds are looking at ESG investments, and when you have a clean energy like uranium, it is a target for inbound investment, and that's really important. Environmentally on site, we plan to put our tailings into below-ground tailings facilities, and tailings management is really important. We can see that happening, with what happened in Brazil and what happened in Florida. And being able to entomb your tailings after you've left and leave a lower impact is really important in terms of environmental stewardship. And then lastly, look, frankly, we have no caves. There are no caves on site. We're not going to be disturbing any archaeological or anthropological sites. We're in the middle of the Great Victoria Desert. This thing, the Yellow Sand Plain, is like an inland sea. The nearest habitation is 220 kilometers away at Laverton. And so we just don't have sites that are going to get disturbed. And we have had constant engagement with the knowledge holders of the area since 2010. So the world's waking up to nuclear power. The election really has been the catalyst. So Biden and John Kerry have embraced nuclear power, and even Elon and Bill are on board. And we're seeing really strong bipartisan support out of America, and that's really what's driven the latest equity boom, because the price just hasn't gone up. The underlying theme continues. We're seeing growth increasing. We're seeing utilities are still on the sidelines, but we are seeing leading indicators. They are buying some of the downstream processing. They tend to buy that first. They buy the nuclear fuel services before they buy the yellow cake, and we're seeing that happen. But really importantly, the edge from U2 now supports nuclear power. I mean, this is about the woke waking up. And when someone like that, this is one of the world's wokest bands. When someone like that is coming out and saying we need to use nuclear power because the windmills and the solar panels take up too much space, and he's from Ireland, right? They haven't got a lot of space and they don't have much sun. So this is really important. I mean, I make a joke about it, but it actually is important that we're starting to see people like him coming out and support the nuclear power. So VIMY I would not be any kind of CEO if I didn't say VIMY's undervalued, because it is, but that's what we do, and we show these great graphs. This is enterprise value to NAV compared to our peers. This is EV over resources and reserves. And importantly on this one, not everyone has a reserve. So a lot of our peers are behind us in terms of where they are in the study phase and where they are with reserves and approvals, and we're a long way down the curve, but still undervalued compared to our peers. Uranium supply and demand, there's really only two graphs you need to see. This is growth. Most of the growth is going to come out of East Asia. It's getting more difficult to build gigawatt-scale nuclear power plants in the OECD countries because they're democracies, and new governments get elected and they want to retrofit safety systems, and that just blows out the costs. But when you see the UAE building 4 reactors on time, on budget, you know it can be done. And so the growth is going to happen in those non-OECD countries. I think what will happen by the end of the decade, we will see commercially viable small modular reactors in countries like the United States, and maybe in my lifetime in Australia, but I'm not holding my breath. Now on the supply side, it is lagging, it is fragile. There is a Fukushima effect, and that's what happened with Fukushima as people stopped looking for uranium, and there just aren't that many mines ready to come into production for the growing demand, and VIMY is one of them. Yes, there's some shuttered mines, but we're seeing mines like Ranger closed, Cominac is closed, so 7.5 million pounds out of 180 million pound demand has come out of the market. And that's been more the regular case as mines closing down rather than new mines coming on. So there is a gap coming. The utilities know it's coming, and so that sets us up really perfectly. Anyone in the industry can see that. Again, I'll just reiterate, we're seeing increasing demand and the Fukushima effect with very little exploration and new mines, and we are seeing a systemic shortage. By 2030, there will be 100 million pounds a year shortage in a market that is currently at 180 million pounds. So the MD of Kazatomprom, which supplies 26% of the world's uranium, said that by the end of the decade, we're going to need 2 more companies of our size. So there's a big shortage coming. The history of uranium pricing. Look, I could talk for 15 minutes just on this graph, but what you have to understand is the spot price is not the price that I'll be getting for my uranium. I'm going to be selling contracts to utilities at a much higher price. Right now, they're not writing contracts because when the prices were low and Kazakhstan was producing too much uranium, basically the utilities bought up and they've got it all inventory, but they're working through those inventories and they have to get back into the contract market. But when you see spot price, add 22% of that, 22% to that just to get to where the bottom contract price is. And I can tell you that in America, there are companies paying up to $70 a pound right now for their uranium because they've written long-term contracts. This is where we think the price will go. This is actually based on some data that I'm not allowed to put into the graph because of the ASX. They have rules about what you can use and what you can't use, and it's getting more and more onerous, but this is where we think the price is going to go. What we've done there is we've taken the spot price, the median spot price, and we've added the contract margin to it, and you're looking at $60. And that's a good, healthy price, and that's just to sustain global production and bring in new production. That's where the price needs to go. So who are we? Development company in Western Australia. Look, this is all available online. I won't get into too much detail, but I do want to point out a fella down in the bottom of the corner, Scott Hyman. He lives in the States. He was a fuel buyer. He was a fuel seller. He's been in the U.S. nuclear industry for 33 years. It's a very small industry. Once people get jobs there, they stay there. So he knows all the guys that buy fuel. We are very, very active with the fuel buyers. We are having off-market discussions. We know that there's a market for our material just in the States. Why am I concentrating on the States? Well, it's 28% of the global market. They use about 48 million pounds a year. But importantly, it's about 80% of the available market. So after America is France. They tend to buy from existing producers. And then you've got China, Russia. China gets most of their material from Asia, and Russia, well, we just don't know where they get their material. It's Russia. But the United States is the key market for us. And the second thing is, if you have a counterparty like a large US utility, you know that you can bank those contracts. And that's really important because this will be predominantly debt funded. Cash in bank is now, just got to read that now. We just did a raise, so our cash is about 19 million. We've just successfully done an SPP. It's still open, but it's fully subscribed, so there'll be another 3 million come in. So nice, healthy balance sheet. We do have some early works to do this year, but what this does is this allows us to be really strategic about our contracts. It means that we can wait for the contract market to come to us. We don't have to leap at the first contract that we're offered and go into a contract at too low a price. We had a lot of institutions come in on the raise. I was really pleased about that. And we do salary sacrifice as well. So 20% of my salary, I buy shares every month with my salary, and most of our staff do as well. So we've got skin in the game, and we're continually building that up. Share price today, I think, finished at somewhere around 14 cents, so we're up a bit, which is great. And we have 2 projects, MULGA Rock in Western Australia. It's 240 k's east of Kalgoorlie. It's, as I said, in the yellow sand plain of the Great Victoria Desert. 90 million pound resource with a 42 million pound reserve. We think we'll probably add another 15 to 20 million pounds at the northern edge and end of the mine life. We haven't converted it because we'll do that out of cash flow. And we think we'll have about a 20-year mine life. NPV is a good, healthy 600 million Australian or 400 US with an IR of 31 million. The capital for the project's about 250 US, and I'll talk about a bit about that, but a really good short payback period. The costs, C1 and all-in sustaining costs are middle of the cost curve, very competitive. We have state and federal conditional approvals. We do have to do the early work to meet a condition of our state approval, and that's why we're doing it. Federal approval likewise, and we'll have that all done, and we're currently working through the secondary approvals. I expect to have those done mid-year. We have a great exploration project up in the Northern Territory called Alligator River. It's in Arnhem Land, so it's not in Kakadu. That has a resource on it, very high-grade resource, 1.3%. But this is the area that hosts some monster deposits. Jabiluka and Ranger up here. The only reason Ranger closed is because the Ranger agreement came to its 40-year end. It's still a viable deposit, and Jabiluka likewise viable, but those are over in Kakadu and Namira, our people's land, and unlikely to be developed, sadly. As I say, high grade, and we have a lot of targets up there. This is a really early exploration area. MULGA rock's really simple, very low risk, low technical risk. It's an old river channel full of carbonaceous material. The carbonaceous materials captured the uranium and a lot of other metals, including base metals. Good grades, higher than many of our peers. Simple geology. We did 2 test pits up there to collect a 100-ton sample, put it through a pilot plant, and those test pits prove that this is free digging. We don't do drill and blast, and the pilot plant showed that we could do very simple off-the-shelf technology to extract the uranium. That's our pilot plant, our test pit. As I said, we are going to put the tailings back into those pits. We're going to put a lot of the waste back in because it's a flat-lying deposit. We can use coal mining technology, ironically, strip mining. So we will have a very low environmental impact, and also we'll be doing what we call real-time rehab. So we'll be rehabilitating the deposit as we go, and that's a really positive. The process plant, we did that down in Perth. It's really simple. We use acid leach, ion exchange. As I say, it's all off-the-shelf stuff. And then we package it and we ship it out through Adelaide. And the reason we go through Adelaide is because they're geared up for uranium from Olympic Dam and from, maybe your deposit, Dave? 4 Mile, thank you. I might just add, we have a couple other uranium people in the audience. We get Dave Pedler-Jones from Heathgate and Siobhan Lancaster, who's just listed a company called Energy 92, who have assets in Saskatchewan, which is Canada, which is where I'm from, so I thought I'd give her a plug. The Ambassador Pit, as I said, free digging, very simple. That's our pilot plant. And that's our yellow cake. We shipped 4.5 kilograms of that overseas, so we are an exporter. We've already done it. And we shipped that away to the converters to test the purity of it, and it gets a big tick of approval. So MULGA rock, DFS is there. Look, I won't go over this, but let's just, I can tell you that for every $5 the price moves, the NPV moves by 180, so it's of course sensitive to price, which is why we really want to be strategic about those contracts. And it has battery minerals. It has copper, it has zinc, nickel, and cobalt. And we can capture these out the back end of the tailings, so they don't affect the concentrate. But if we get this right, we could get $4 to $5 back on our costs and bring our costs even lower and be a true tier one company. That's the all-in sustaining cost of production for the globe, and something just to take away from this is the enormous gap between current production and demand. So that gap isn't going to go away anytime soon. It can be filled a bit, but it's not going to be completely filled in, and that's the big problem. So how do we do this? Well, basically, uranium is a contract-led market. There is no open market for uranium. The spot price is not a clearinghouse. We're going to have contracts with US utilities. Once we have those contracts, we will be able to then get debt. And we plan to leverage up as much as we can to reduce dilution. Now, by the time we've announced contracts and by the time we've announced debt, we won't be a $125 million market cap company. I would expect us to be significantly higher, and that means the dilution on the shareholders will be less. Once we do that and reach financial investment decision, it's about a 2-year build to get to exporting uranium. So all things being equal, we would hope to be exporting uranium in about 24, 25, hitting exactly the spot where the US utilities are really uncovered in contracts. And that's why the contracting strategy for us is just so important to be doing it now. Alligator River in the Northern Territory. This is a large uranium province that is very similar geology to the richest geology in the world, which is the Athabasca Basin. And what I've done here is I've just showed our tenement block compared to the Athabasca Basin, quite a large tenement holding. As I said, it's in RIU land, so this hatched area is Kakadu, obviously no go. But once you cross the East Alligator River, which is literally full of crocodiles, you're not in RIU land. We have agreements with the Aboriginal people to progress the project. They're very keen for us to do that. Obviously, not a lot of jobs up there. And that's something we will do in the future. A lot of targets. We will own 100% of it soon. We have an agreement with Rio Tinto to acquire the remaining 21%. And as I say, we want to get up there and do some drilling. Probably not this year. It's hard to get drill rigs up in the territory with COVID. They don't want to cross borders. So this year we'll do more field work. But we also have the options of looking at other ways of extracting value with partnerships or spin-outs. Look, I'll pass by that. I'm running low on time. Come to the booth and have a chat. What we're going to do this year, stay focused on the main game, which is getting contracts, keep the team uranium boom ready. We're very active in the market. We're prioritizing our spending, even though we've raised money. We're not going to go whoopee and spend money frivolously. We'll still maintain our salary sacrifice. We have early works on site, so that'll be exciting. We're looking at optimizing the flow sheet. You get an extra % in recovery, and you're making more money, and we're not wasting our time. So going forward, the investment opportunity, short term, we've seen the shift in sentiment, and we haven't seen the price go yet. So that's the next jump. The metrics favor us. I mean, we are undervalued. You look at any metrics, particularly when you look at some of the research done by Shaw Partners. But long term, the world is shifting. It's shifting to clean energy, and it's shifting to uranium. And we have a great asset with a great team, and we're lining up the customers, and that'll lead to production. And look, if you're a producing asset, you are delivering sustainable growth to your shareholders. And I'll leave it at that.